IHS, advancing decisions that advance the world.
It seems like with Osama bin Laden's killing and of course the Arab Spring in the past few months, the markets are now maybe coming to a position where they think, you know what, we might actually be able to shave off some risk off as it's called, from the oil price. There has been warnings about the threat of potential attacks, revenge attacks, throughout the Middle East, throughout North Africa, indeed throughout the Western world. For that to be a sort of threat to the oil industry, it would really be, of course, the big Gulf producers and any targeting there. And I suppose, that threat is something people will keep on the radar. But we do need to remember that even when countries like Saudi Arabia in particular felt the most acute threat from Al-Qaeda earlier in the past decade, they were actually able to protect their critical infrastructure very successfully. So today, with a much weakened Al-Qaeda presence in particularly the Gulf states and Saudi Arabia, the risk of any very disruptive attacks is probably lower. With the Arab Spring, of course, there was a tremendous explosion of insecurity, of doubts about where the oil price should be. The risk premium came back effectively, but by now we're starting to see that momentum slowing of political change in the Middle East, and we see the Libyan civil war situation being more self-contained. Egypt and Tunisia are sort of dealing with their own domestic problems. We probably will have a lot of political uncertainty there, but for the global sort of level, the implication is smaller. Of course, we still have a few cases like Syria and Yemen, where a lot of uncertainty potentially could lead to further spillover, especially with Syria, which has such a crucial position in the core of the Middle East. But for now, at least, it seems like the risk of more countries being sucked into this Arab Spring, as it's become known, is being downgraded. The Libyan situation is frankly very discouraging, and the problem with Libya, which I think we've been able to say now for well over a month, it's a civil war-like situation, is that it's very hard to see any kind of improvement. In fact, the trend is probably still pointing in the wrong direction. Now, the NATO-led coalition might still be very optimistic on the Gaddafi regime being weakened and potentially not having much time left. But I think for the industry looking at Libya, even if the opposition would suddenly, almost from out of nowhere, win a complete victory, it will still take quite a long time to restart oil production. And I think it's very hard to see Libya returning to anything close to full production before, a bit into 2012 now, as it seems. And the problem, of course, more kind of realistically in the short term, is that we have the fault line still running straight through some of Libya's main oil fields and oil-producing areas. And as the rebels will want to sort of restart oil production after it was attacked by government forces last month, they still look pretty unable to defend it from potential attacks from government troops. Saudi Arabia actually lowered its oil output in the last 2 weeks quite significantly. It might not necessarily have reached those low levels yet, but it seems to have throttled back. And of course, some people were taken a bit by surprise, but very high inventories in sort of global inventories are always very important for Saudi Arabia. And as the political risk in the Middle East was subsiding, it is quite clear that sort of returned to the top of their priority. And it seems, in fact, much of the extra crude which they brought on stream wasn't needed. Now, of course, that might look surprising given that we still don't have Libyan production, but Libya's very light crude has most of the buyers of that needed the very light crude have been able to source it from other areas, it seems, and Saudi Arabia has struggled a bit actually to place its own blend, its own light blend it created in order to supply buyers potentially without Libyan crude. actually, and I mean, they found themselves struggling sometimes to sell it on the market, which might look surprising, but I think when we sort of take stock of this towards the end of the year, we might have a much clearer picture of what actually happened.
IHS, advancing decisions that advance the world.